All right, guys, you guys ready to get into this? Looks like the levels are good. Let's switch to the main screen here. And we're live. Let's get into this, guys. Hopefully, you're able to watch this when you're at work and doing stuff. I know it's a little later than yesterday's one, but had some things to take care of today in the day-to-day. Also been talking with Mining Disrupted. There's a conference coming up down in Miami on July 21st and 20th and 21st, and I'm looking to get at least a few of the BBT crew and myself down there to bring some coverage down there for you guys when it comes to, this will be a month from now with all this kind of China stuff that's going on, and we'll get a good pulse on the industry side, on the mining side. So I'm trying to bring you guys some content there. I was going to reach out to either Sun Attack, Voscoin, Drew over there, and see if they wanted to join me. I'm going to look at finding a place down there or staying at the hotel. I don't know yet what to do, but trying to get some dual coverage there with somebody else that's in the space out there, as it were, to get kind of the dual perspectives, and at a minimum set, have some conversation with some other folks in the space on the GPU mining scene and, general mining scene out there. So if you guys like that, you definitely want to subscribe and follow, because we'll be covering that. And it's very on topic when it comes to mining, the companies that are supporting mining, the power, production, ancillary systems when it comes to like your rig hardware and all of that jazz too. So it should be pretty good. So anybody that was following yesterday's discussion, and again, that was not like paid for content. That was just me looking and finding the mining conference out there. We may get media passes, which makes those passes free. I don't know that effectively yet. And I'm asking them for discount codes for our viewers. That way you can save a little bit of money. So don't go just right out there and start registering just away. Wait until we get to see if we can get some discount codes for you guys, if you guys are down in the Florida area and you can come to that conference. But again, shameless plug for just us being down there. So it's not technically sponsored content or anything yet. Someone claiming to be you in here. No, nobody is. If you see another BitsBeTrippin thing that does not have the check mark, that is not me. Where did your Alienware go? It's actually upstairs. I've been doing some stuff on the Mac though lately. Anytime you run a lot of these deployments that are Linux based, the environment and the shell environment that comes with the Mac is it. I'll bring the Alienware down shortly. Probably on the next one I'll have it too. But all my Linux based stuff is ran on the Mac. And plus it's just easier to navigate in any kind of development environment, kind of the go-to. I mean, I have a Windows development environment too, but there's a lot of content that is on the Mac side. So today's video, anybody that's been following, kind of jumped around on you there. Anybody that's been following this entire move by China to ban cryptocurrency, not just mining, but transactions, also banks seizing accounts that have look like they've done some trading activity. Because remember, a lot of interacting with crypto in general is done through trading activities. Like people may see mining, may find mining, may try it even for a little bit and then go, yeah, that's not for me, but I'll buy the cryptocurrency now that I understand it. And then that comes out through transactions and, hooking up your bank account and all that sort of thing. So this ban stretches into also participants in cryptocurrency. So that's another huge selling pressure from the East when it comes to what some of this, depression is on people pulling back. And, some people are just hear news and they sell that news. The downward pressure on the sales side right now is not taking away from a lot of the bullish trends in this space, where you're looking at innovation, you're looking at upcoming updates and force. We have Taproot coming to Bitcoin. That's a big deal. There's, you could be on the fence on ETH POS and 1559, but the proponents of those changes are very bullish for those changes. Again, that's very good public sentiment that is for those changes. So you're looking at positive momentum on these things, and then you go back and look at the price and go, what the hell, right? And you look at, it all comes back down to supply demand at the end of the day. If there's people that have been holding on coins for whatever reason, and now they're in a position where they need to exit those positions and try to get to fiat or try to move that currency out, you have this kind of situation where we start seeing pretty large pullbacks like this. Now, what's relevant in that, this is not a TA channel. If you found this channel and you're wanting to know charting and all that, I am not going to get into that. What I'm going to pull back today is bring up some stuff on the screen for you guys to look at what does it look like from a mining standpoint. So if you're a hardware miner and you're using, proof of work content when it comes to GPUs on Ethereum, Ravencoin, ETC, VTC, it doesn't matter. If it's a proof of work currency, it could be Bitcoin itself, Dogecoin, Litecoin, if you have ASIC miners. How does a pullback like this affect you? And I wanted to take it from just not a linear, here's the hash rate, and then here's the profitability chart. I wanted to look at it a little differently when it comes into the data and the numbers. And then also set up the updates to the mining model that I have. So the mining model is at 3.0. And we'll switch over to that here soon because I have some updates coming to that so we can start to track as we lead into 1559 and we start to see that yield being burned. What's that do for the remaining yield that's there? Anybody that's been mining Ethereum for the last few weeks have noticed a massive drawdown in yield, even though we've had almost a 22% drop in total net hash. So net hash peaked out a little over a month ago at about 643 terahash on Ethereum. And now the hash rate went as low as 503 terahash. I think right now it's like 523 terahash. So we've dropped almost 110 terahash. To give people a perspective, that is an order of magnitude on the Ethereum network. So when we look at the history of Ethereum mining, as we led up to the 2017 kind of bull run, we were only talking like 200, 250 total terahash from essentially gigahash of hash rate to 250 terahash. And just in the last few weeks, we have dropped 150 terahash. So an entire order of magnitude when compared to a scale like that. That is a lot of hash rate. So, this could be GPUs, it could be a lot of ASICs. What I was trying to do before this live stream is I was trying to find a few of the addresses on F2 pool that have been mining with the Silicon A10s and A11 Phoenixes. And because there was a couple addresses that were mining with those, you could tell by the worker names, you could tell by the 2.6 gigahash per unit, anywhere from 2.1 to 2.6 gigahash per unit. And those addresses no longer are being mined to that I could tell. So it looks like some of that has came off of F2 pool. So when we were talking yesterday, when it was coming to Bitcoin mining, for anybody that was not tracking yesterday's, most of yesterday's discussion was the what happens to those miners, not just the people, but what happens to the actual hardware. Is it being shipped? Is it being powered down? And over time, is this a bullish case or not? Which, shameless plug for yesterday's video. I believe it's a bullish case because these things are going to get stood up or they're going to get turned back on at some point back for the network. And then, maybe China comes out with less than 30% total net hash worldwide versus having 60% net hash, because a lot of that stuff's going to come off and move before they can get their whatever rules that they're going to have now to operate against, if it's going to be state ran or whatever. So this was mainly around Bitcoin discussion. Well, today's discussion is about altcoins and how have the altcoins, not just because of price, it gets kind of clouded with price. People are like, see the price and you have a natural decrease in hash rate because of price. But what I'm going to show you today is some of that research that I've done is it's still profitable even now for a lot of people, and the profitability is still way up there. And I think it's a good segue to get into that data part versus just talking about it. So let's switch over to the screen real quick, and let's bring up an Ethereum. This is Ethereum based right now, and we can get into some of the other coins, but Ethereum based right now. Let's switch over to the screen here, and let's look at this one. This is from BitInfo Charts, and this is a really good chart because it shows a leading indicator of total profitability by US dollar per day by 1 mega hash of hash rate performance. Okay. And what this does is this gives us a statistical indicator of were these days profitable or not? And you can see in the upper left here, I'm going to kind of walk you through this. So in the upper left here, you have essentially the date and an aggregate that's calculating how much USD profitability per 1 mega hash of hash rate here. So down here says 1 mega hash of hash rate, and the metric to the left is a US dollar equivalent. So what it is saying for every 1 mega hash, what was the output per day for per 1 mega hash? Now, mind you, most of our things, I'll give you an idea, a single GPU, a RX 470 from 2016 gets 30 mega hash, right? So you would take that 30 mega hash per day and you would translate it into that profitability number that's up there. So it's about 1 cent per day on, this particular day that we're sitting on right now, 12/5 of 2018. That was 1 cent per day per 1 mega hash. So if you had a 1 GPU, it's about 30 cents per day. All right, everybody tracking. I'm going to make sure everybody's tracking in chat, and that helps to ensure that I'm explaining this correctly for people. So then what we can do from a chart like this is we can understand that all things being equal, not including your power, right? Each power situation is different. That is your cost aspect, right? But this is the pure value extraction out of a network when it comes to pricing of per mega hash. So you can see the little bit of spikes that we got back in 2020 when the first set of DeFi came online. And then we can see the real big push up with the ETH price. And mind you, ETH price and difficulty went up. So from a profitability standpoint, they're kind of competing, right? As the hash rate goes up, you get less yield, but the price is going up. So your yield is worth more, even though you're getting less of it. It still brings total profitability up when you look at that. And where we look at, we're setting right now. So even right now, and starting to tick back up right now, because even though the price is about $1,900 or $1,800, difficulty is dropping pretty substantially right now because of the powering off of stuff. And we're going to see you would see this go up a lot more if pricing would have held, because the hash rate has been dropping, but the price and the hash rate both are dropping precipitously. So if price was staying up, it would still be more profitable, but because the pricing's coming down, it isn't as. But we still have a little tick up here. But you can see where I have that line drawn right now, or well, it's just showing that line. We're still over the beginning of December rates from a total profitability. So when people, and I'll switch back to the screen in a second. When people come back and they say, well, everything's on fire. Everybody's, they're waiting for GPUs to come down in price and all this stuff. Until that, from at least the pressure of GPU cells, until that chart starts to show profitability per day well below 6 cents per mega hash, because right now it's setting at just over 6 cents per kilohash, or 6 cents per mega hash. It's almost 6x in profitability per mega hash, even right now, than it was in 2018. So that gives you a perspective. And right now we have more efficient GPUs that are out there when it comes to like the RTX series. So until we see either a pullback in price a lot more, or network difficulty comes down a lot more. Now, as more Chinese miners turn off, you're not going to see a relief on that GPU pricing. And that's the key metric. Like they're looking at different things, and I've seen a lot of people type in things and saying, hey, eBay is going to be cheaper and stuff. But I look at it from a macro level on this. And the reason why we're seeing a precipitous drop in total hash rate is because miners in China are turning off. If miners in China were not turning off, this profitability would be lower because the yield you'd be getting would be less, but the price had came down, right? So you'd be getting less yield, and as the price is still going down, it's causing it to be less profitable, obviously. But what we're seeing is because they're turning off, we're also having a price drop too. So you're having kind of both edge sword coming down. It makes for an interesting kind of dynamic right now because it's like the entire market is contracting right now, but we're still at 6 times over the worst case scenario in 2018. So I wanted to make sure if you haven't been tracking, mining at that kind of level, especially when it comes to just covering your cost type of mining. This is not talking spec mining. Spec mining is a completely different thing, and we'll talk about that in a second. And that's what we call speculative mining with your hardware, where you're taking a speculation on Ravencoin's growth, you're taking speculation on ETC, outpacing its last all-time high, which was $175. That's more speculative mining. This is more of what's the most profitable and what makes sense to mine aspects, and where does it sit in the stack, as it were. So we're still setting. That's where I'm looking from a standpoint of the crazy profitabilities, and that's even with a massive reduction in total net fees that are going on Ethereum right now. We're at about 2.6 coins per block right now. That's a 0.6 mining additional reward when it comes to transaction fees. And as we've seen, a lot of the transaction fees I've seen it as low as 2.2 coins per block. The 2 that were owed as part of securing the network in the current, mining reward schedule, plus 2 on the transaction side, as more things have moved to Matic and layer 2 solutions, right? Where they're not paying, a lot of these networks are not having to pay, layer 1 base fees anymore, because it's all being done in layer 2, which has a lot it's traded the decentralized network for more of a centralized network, but it's allowing you rapid transactions at low cost fees. So a lot of these dApps and apps that are on Ethereum have started to switch to that, which was causing a lot of that, especially when it comes to like Uniswap v3, PancakeSwap, all of these DEX aggregators that are actually being market makers, and they're handling all of the transaction volume when it comes into that, all being now layer 2 base. So it's reduced those big spikes to 8 to 10 to 12 ETH per block reward, or per block reward, as the additional 8 to 10 extra ETH that we would get per block. Even with all of that, the price is actually held pretty decently in all this discussion. So that's a kind of a macro view of it and how I'm tracking it, and what the indicators that I'm looking at is there still going to be a continuation of turning off of hash rate? Because right now the bottom line, if you just caught up, the bottom line is the activity of hash coming off the network right now is not indicative of like the pricing that's going on right now or the reduction in yield, because it's still 6 times more profitable than it used to be in 2018. So what that's showing us is that the hash rate coming off is miners in China turning off. So it's not like value incentive type of thing. So it's still 10 to 12 cents per kilowatt, still profitable, very profitable when it comes to the history of mining right now. So, what does the price retract to? Nobody knows. EIP 1559 has had zero effect on holding price discovery for Ethereum. We've already seen that. That was one of the scenarios I'd highlighted out, that artificially adjusting Ethereum's bull case when it comes to trying to reduce supply through some kind of arbitrary burn mechanism would have zero to no effect on Ethereum, besides the little bit of speculation that you got from some of the bigger influencers just pumping it up, saying, hey, this is a good thing for Ethereum, not really taking you through the technicals of all the history each time this has happened, it's done nothing. And each time Ethereum has done this, it's literally done nothing. This is a prime example of this again, where we're 3 for 3 now on an upcoming update that really has next to no effect on price discovery. But the real effect of hash rate coming off this network. Now, the other thing I wanted to make sure and we check into here is how does that make it look when it comes to other networks? What are other networks looking at? I was seeing a retraction of mining hash rate proportionate to Ethereum or not. And that's one of the things that I'm updating in the mining model. And we'll take some time here today just to kind of bring it up. But this is one of the updates that's going into the mining model. So I'm going to be looking at what's the delta. So if we've seen Bitcoin come back down 30%, 40% of its total hash rate withdrawal as Chinese miners are turned off. Ethereum, we've seen a 22% drop in total net hash rate. Looking at other networks, when we look at Ethereum Classic, and I'll switch to the screen here, network hash rate of looking, is this proportional? Which really shows how much mining hash power was out there in China proportional to these different spaces and what was being applied. And really from Ethereum Classic, I'll use this as an example and we'll switch over to it real quick. So Ethereum Classic's rate, why it has proportionally came down against its price, where it was like $63. When the price was about $63, we're at about 27 terahash and we're down to about 19 terahash. That again is also another about 20 some odd percent perpetual drop on that. Now Ethereum Classic set at $37 is another 12% decrease today, but the hash rate's still coming down. That is still pretty high. 19 terahash is still pretty significantly high when we look at the total hash rate here back at about 8 to 10 when it was a price point of around $8 to $10. So it was about $1 per terahash equivalent. So if it was $8.60, it was about 8.6 terahash. And it kind of followed that ebb and flow of what the pricing was, besides back in September when it was way out of whack. Whenever it was getting its hacks happening, it came way, way, way dangerously down. But after it did its mess update, which was the multiple exponential subjective scoring, which is its 51% protection around November, we saw that Thor update brought up, it almost doubled the hash rate, even though the price technically didn't double at that point, but a lot more confidence. You can see confidence in there. So just an example of something like Ethereum Classic, where it started to tell off now, but we're still seeing, this was peak around here at $175, but we're seeing these turn off. So it's still a profitable space, both on that for the mining standpoint on Ethereum Classic 2. Let's check Ravencoin mining, our network hash rate as again another example. And Ravencoin had a little peak here up to about almost 6 terahash, and it's been pretty flat. I mean, over the last, even though the prices came down quite a bit, we've seen that kind of tell off since its highs back in April when it hit 27 cents, and it's since been really actually about 4x over its previous network highs, where it was 1 penny. So right now, Raven is setting right where it needs to be from a hash rate when compared to what it was when it was about a penny a piece, and it's at about 4.5 cents per piece now, almost up to 5 cents, and I can see that hash rate going back up to 5 terahash. Now, this is an interesting thing, is that we saw some stuff turning off here, possibly, but again, remember Ravencoin just a few days ago was still sitting at 7-8 cents, and it's now dropped. It took a little drop with this, but it's actually bouncing back. So this is telling me is there's not a lot of Chinese miners mining Ravencoin right now, because we have had next to no drop in hash rate here, comparable to its price, where we have seen distinct drops in Ethereum and Ethereum Classic, which is a very interesting dynamic here. And that's one of the things I wanted to do a little more research with and provide you guys with the data and the timing and put that in the mining model, which is right here, which would be an update that I put in here with a new tab. As you started to see, I've created an ETH hash transition model here as where does the ETH hash move after proof of stake, and looking at the coins that could take any kind of weighting. And I'm working on this update of this model right now for you guys. Again, all of this stuff's all open source. It's all data that I'm sharing with you guys. I will make sure that you guys have links to this. And this is just the raw mining of essentially the data of where does this hash rate go? What's the force projection of the hash rate? What coins does that hash rate go to? Regardless of your opinion of shit coins or any of that kind of stuff, it's just the math. This is happening with somebody's toxic maximalism or not. This is something that's happening and occurring, and I'm looking at the numbers of where this kind of stuff goes. So I have most of the major coins on there, and I'm looking at this current spread of the network versus its current price. I need to update some of these prices, and you guys can see I'm leaving all the formulas in here for you guys can go, and if you want to model this yourself or make a clone of this document and take some of the effort that we've put into creating APIs for you, that's all going to be in there. But the base part of this model is going to help people understand, or it helps people understand an ability of what happens when we have something like this China pullback, where you have a retraction, a known retraction. We can see the network hash rate come down, and we can take a educated position to say, while people in North America or in Europe could be turning off their miners, when you have this large kind of outlier that's happening where you have a 30-40% drawdown on a network, we can start to take safe assumptions, at least from a predictive modeling standpoint, and figure out like, okay, if that part was the China market, when do we start seeing that come back online? Because nobody can get really equipment right now. Like, right, if we see large drawdown on the GPU market, like it comes unproportionate, where and this is what I was kind of anticipating, is how much GPU mining was happening in China. And if they turn off all of it, is that 50%? And does that make Ethereum Classic be twice as profitable as something like Ethereum? If they shut down a lot more of the Ethereum miners, are we going to see this continuous precipitous drop on total mining hash rate? Even though the price is staying pretty relatively stable around $2,000, if we see that hash rate drop to, like, let's say 350 terahash, down from its high of over 600 terahash, then we can say, like, that all that's doing is giving more yield to anybody that's in the space. Even though the price isn't as high, you're getting more yield for your hash rate, and that's why that profitability chart is a very key chart to look at on that. But this is the level of effort that I'm trying to put into this to help make sure that when you, as for our audience here, and anybody that is a miner on, just a home miner that has maybe a small setup, or that you can kind of see, does this make sense for me to either go either way when you're hedging your risk on what to mine? And the easy go-to is obviously Ethereum, because it is by far the most profitable when it comes to the mining and yield extraction. But there is, you can see if there's better speculative plays for you on something like Raven or Ethereum Classic or Vertcoin or any of these, Metaverse, Expanse. Do your own research on your different coins. I've seen a lot of folks asking about a lot of different coins, but the primary ones that I just said are the ones that I look at. I'll make sure I have the links below. I'm definitely going to open this up for questions for folks. I wanted just to give everybody that kind of macro view of where things are at and where I'm looking at things, and the updates to the mining model that's coming this week, for you guys can kind of see, is there correlation with China? Start popping up some of your questions. I did see some people were asking me questions on there, but I was trying to get through this piece here and see where things are at, with you guys. Hopefully this is good information. You guys are enjoying this kind of versus trying to do an edited copy of this. I wanted to have this delivery, and then I like the question and answers because I think it provides additional clarity for people, or it answers a perspective that I'm not answering for you guys, that somebody else has a question on, and you get more from it. So let's see. This is Let's see here. How do you feel about Raven being at 5 cents? I think it's proportional to the market right now. And the hash rates came down with it. But so far, it's been pretty decent. You guys are just liking the content. That's great. You guys have any specific questions? You know, I had a lot of questions today on Twitter, direct messages, and people are just like, I'm freaking out. This market's coming down. What's going on? I think I keep pointing them to yesterday's video because I really pitch I think this is good for the long term. I do feel for folks that live in China and that are, that worked blood, sweat, and tears to get their farms up, and investors in that, and then are just being kind of overran and told to shut down. That sucks. I mean, from a human aspect of it, that, some people are doing it for their health type of thing. I mean, because it is what they do to provide for their family, but it just sucks when you put all that effort into one of those farms and it just gets taken over or shut down, or you get told to shut it down. That sucks. Does this mean we will have less difficulty? Yes, that's what's going on right now. That's why your profitability white is a little pushed down. You are getting less difficulty. It's about a 22% less difficulty, at least for Ethereum right now. Will my yield go up if the hash rate drops? Yes, to a point. So hash rate is your yield is determined by a couple things. It's actually determined by about 3 things. It's determined on the pool that you're pointed to. It's luck at winning blocks. That's a key one. And is that pool winning blocks proportional to its total hash rate? And that's kind of your luck and reward. And you want that as close to 100% or lower as possible, because that means if it's lower than 100%, that means your pool is winning more than they should be winning. And then that helps drive on the proportional amount that you're going to get paid out. Then it all comes down to what's the block reward, which in Ethereum's case, because of its hash rate or because of its transactions, was creating a higher reward over the last few months. So you were getting, instead of getting 2 coins per block every 15 seconds, you were probably getting 4 to 5 coins per block every. So then you're looking, the net of that is it's a 50% to 70% increase of what you should be getting in yield on top of your pool luck, and then effectively divided by the total difficulty of the network. So as if the network went up twice as much from a difficulty standpoint, you would normally get half as much, but then that half as much was made up by the increased amount of total block reward that you're getting because of the transactions. So even though the hash rate was up, you were getting more than what, quote unquote, you should have been getting because of those fees that were included in the block reward. Is it a ban on crypto, or a ban on hardware, or a ban on ASICs? How many banning is there? Is it now permanently dead in China? So yes, it was a blanket takedown and cease and stop order when it came to mining. So from what I have seen and what has been published on the various channels that I have seen, and crypto Twitter folks that do active builds in China, it was a stop order, which business folks in China are going to make a decision with a stop order. It wasn't a seizure. They weren't going in there and shutting, like locking people up. From what I understanding, it was just hey, you stop mining. So that was part of it. So there was the physical part of that, right? And some of those folks and business folks are not waiting, right? They're just like, you know what? I can't mine. Then that stuff's all getting packed up and ship it out of here and let's sell it, right? Same thing with some of the coins, but a little more complicated on the coins because they're not supposed to do any kind of cryptocurrency trading or not, right? So it's a kind of a catch-22. Hey, you're not supposed to do any kind of interaction without reporting your usage of funds. So if they were mining and they were going to a wallet and then they were trading or selling it throughout like Alipay and all that, they're supposed to stop all that too. So they wanted a complete stop and seizure of a stop of that equipment mining, and they wanted a stop of you moving that money around. But what's happened is since they're not seizing the equipment right away, that some of that stuff is shipping and coming out of country, and they're just trying to protect their interest in some way. And how far their law goes, I don't know. On trying to reacquire that equipment, stopping it in the borders, all that kind of stuff. Nobody knows. I'm hoping to get more of that information down at Miners Disrupt down in Miami. It'll be a month later, so it's a month from right now. And we'll hopefully get some more information from folks that are going to be working and procuring some of that equipment. And we can get some more stuff from like Compass Mining and those folks too. Do you think it's still a good time to buy GPUs or wait some more? If it all comes down to GPUs retail price, if you can find on a shelf somewhere an RTX 3080 for $899, it's a good time to buy. I mean, that's a retail price, and it's still pretty decent. If you can find mining editions cheap, it's not too bad. But right now, I don't think, based on what I'm seeing here, the decrease in hash rate is China shutting down. It isn't US miners turning off, because the reality is why you're not getting near as much against your cost. If you're at 10, 12 cents per kilowatt, you're probably really close to even right now. And your ROI is probably 800 plus 900 days. But like if you're at like 5 cents per kilowatt, you're in pretty good shape, and you're getting actually more yield and more output, because even though the total amount of ETH that you're earning less of because the transactions aren't there, the hash rate's coming down. So you're getting back some of that yield. So I don't anticipate GPU sales to slow down right now, because it's still not below that profitability chart. That first chart that I showed you guys in the beginning, and I'll come back to it real quick for folks that have not seen that chart here, is the mining profitability chart on BitInfo Charts, because I showed it and it was about 300 people, 200 people in the channel. So this is the key one right here. This is the most key chart you can look at in this entire thing. When you're down here and you're at 1 penny per mega hash per day, so an RX 470 gets 30 mega hash per day, or 30 mega hash would be 30 cents per day equivalent. No matter what your cost is, this is irrelevant to cost right now. We're still over here at 6 cents. We're a little over 6 cents per mega hash per day, right? So since we're even way up here, and this is, you can see the date on it, 6/21, it's 0.0667 right now is what we're setting on. At one point on 5/12, so on May 12th, we were at 28 cents per mega hash. That meant a single RX 470 for that one day, for a short period of time, it was probably within 4 hours, it was making what's 30 times that, right? You're talking what, $6-7 a day per GPU was the peak. That was like peak, like crazy. Like that day was a big payout day for everybody. But we're back down to 6 cents. And if I go back here, so some folks asked the question from back in 2017, what does it look like from back in 2017? So let's go to all time here. And what we'll see here is we come over here, you'll see if I do it peak time back in 2016, your total profitability here was just at 30 cents per mega hash per day. And this was what, 3/13/2016. And the reason for that wasn't because of price. Remember, if you guys do a price comparison on that day, and somebody could do that in chat while we're waiting here, 3/13/2016, I want to say the price was probably around, that was the day that I got up to like $20 back then. But it was because the network hash rate wasn't very much. So your yield was crazy. That month of, I'll give you guys an idea, that month of March of 2016, a single 145 mega hash, 150 mega hash machine would make over 100 Ethereum. So I made a video not too far after this date. You guys can go back to my videos back in 2016 and look up March, mid-March, and look at the videos that I covered in mid-March. And what that showed you is at like $8 Ethereum price, you were making essentially you were making $800 a month because you were able to mine 100 Ethereum on one machine. Right. So that's why, even though we've had some, $4,000 ETH price with these crazy, crazy ETH fees back in that day, you're looking at like 100 Ethereum. So that would have been equivalent to $43,000 at Ethereum's peak per month on one single rig, which is just cray-cray, right? So we're not at those levels, even though we hit some pretty high peaks here, 27 cents per mega hash per day. So the other thing I like to look at is the volatility chart. So this is a really good, it's called 7-day momentum, right? So when you're looking at extreme volatility, big changes in net hash. So this is a net hash chart. So if we're looking like this little blip right here, I think was the Dow hack when they reversed it, and it kind of just totally threw everything off. But when you look at net hash, so this would be considered in statistics an outlier. So it's explainable. There was a weird event on the network because there was a reverse, and you had this kind of negative hash rate and then this positive hash rate, and they kind of offset. That's what happens when you go and mess with the network and reverse things. You end up having this crazy, weird negative turn. But when we look at even some of the crazy volatility that happened back in 2018, 2019, where we went down to like $86 and then back up to like $220 in the same month, look at what's going on in this past month, right? It's kind of off the charts, really. So what we've had is extremely weird growth and then turn off of hash rate. So we had a spike all the way to 643 terahash, and then we've had China shutting down and massive amounts of terahash coming off, even though profitabilities are still up. So it's created this very unique, weird, representation of that when it comes to net hash history on a 7-day momentum chart. So again, BitInfo charts shows you a lot of this, and it's like kind of like a very interesting telemetry on what's going on. It's the kind of stuff I like looking at to figure out, is this just some kind of weird macro play by somebody? Are there, is people, the hodl are selling? Is there some new hash rate that's coming on network? Is some other events have occurred with this? This has been a very transparent event with regards to China being very vocal and then hash rate coming off. We're seeing the reciprocation of that, agnostic to profitability. So, it's an interesting standpoint, and it really comes down to we're seeing how far this goes down, because mind you, they got that order 4 days ago now, and we're seeing the hash rates come off. My question is, how much more comes off, and what is there specific speculative farms somewhere that haven't turned off? And then overnight we see, a 20%, 30% hash rate drop in like something like Ravencoin or Ethereum Classic. Like, who's still the shadow miners that haven't turned off yet, and how much network hash rate comes off with that? That's not proportional to price dropping, because I think we're going to hit a floor here, and then this thing's going to bounce back as this hash rate starts to move, and we start seeing deals and hearing deals, and institutional investors get back in because they're like, oh, okay, that hash rate's moving back over, and it's going to come back online, and it's all adjudicating itself off. Yeah, the right side of the chart is cut off. Oh, you guys, the right side of the chart was cut off. Oh, I'm so sorry. Did it not show for you guys? Somebody said it was the chart was shut off here. Oh no, you guys are seeing it. That's effectively it. It literally, that's the end of the chart. April 2021. Let me see here if I can shift this around a little more for you. There you go. How about that? So there's the volatility that I was talking about. You're going to need to rewatch. That's what's great about these live streams where they have, you guys can always come back and rewatch them. So again, I'm interested to see if we see a lot of the Inosilicon machines coming offline, and how much more is this hash rate going to drop? Because we're at 500 terahash right now, estimated, versus 643 at its peak. And I'm going to put some prediction out there. I bet you it drops down well into the 400s of terahash before it finally stabilizes. Andrew says, we get the idea. I'll take a few more questions, guys, and then we'll wrap this one up. I'm trying to keep these to right at about an hour. We should have a normally produced video today. We did have a video that we did put out from Miner Summit, where Michael Saylor and Amanda, I'm going to butcher her last name, starts with an F, Fobonani. I'm probably totally... And Amanda, if you see this, I'm so sorry for saying your name incorrectly. I've never had to speak your name before. From Galaxy Digital, that they went back and forth. Fabiano. My dialect is horrible. As Vanessa tries to correct me in the background. But Michael Saylor and her went back and forth on a Zoom call that was part of the Miner Summit. They were unable to make it to Miner Summit, but they were able to at least have that while we were there, and we posted that for you guys. Well, the DAG size increased? No. The DAG size is just an aggregate that is set up to increase over time per each epoch. So it's just a calculation step, as it were, for the way ETH hash works. So it's going to continue to go up. There would have to be a hard fork to make the change to the DAG size. We're at 524 terahash right now, yes. Do you think farms turning off will bring down the price further? No, I mean, there's a little decoupling there. Like, mining does not totally predicate price discovery. However, it is kind of a leading indicator from a network strength standpoint, and there's concerns with anything whenever you have the securing of a network losing a portion of its hash rate, right? There's going to be a knee jerk on a risk standpoint that's not going to be tolerable for some folks, and they're going to take money off the table and say, hey, this network might be losing 30% of its hash rate. I'm out until it can fix itself, and that's out of their risk profile, right? So, and then you have the other aspect where people could be put into a position where they have to pay certain things, and now that the mining farm is turned off, some of those bills are on loan, and they're still having to pay that note. So you have a couple interesting situations where they're kind of, while the long-term hodl, are now forced to sell. And I don't know anybody. There's a lot of people in this space that have taken pretty substantial amounts into the space, and unfortunately, it's like a personal life margin call to where you're like, man, I really don't want to touch my crypto holdings, but I have this life event that's occurred, and I have to sell some of it at a horrible time. And there's more times than you can imagine people having to tell me, oh man, I had to sell some of my crypto because of something happened and it sucks, I'm out. And then pullbacks like this give people another opportunity to maybe get back in if they have that situation fixed. So, that could be happening right now. That life situation right now is what's going on in China for anybody that had any kind of investments in there and may need to exit some of that position now because they have to pay some of their responsibilities. So we see a big draw on that, supply pool where they're just selling coins right now because they got to get out. Will you be camping out anytime soon to be the first to pick up hardware? Camping out the store now, supply chains are broken. Yeah, I probably will. Maybe something that's actually fun to look at. I did with light hash rate, the LHR changes to the NVIDIA line of cards really kind of, there was no point to setting out there for the TIs for me. And when we look at, what's the next thing from AMD, maybe, mind you, both times I camped out were for the 6800 series and the 6900 series. So I'm not saying I'm total pro AMD. I just, that tech stack I'm more attached to than NVIDIA, because NVIDIA hasn't done certain things. Like NVIDIA still hasn't fixed its compute issues in its drivers. So that's why folks that are mining with their 1070s and 1060s and 1080 Ti's are seeing a hash rate decrease, right? So if you stepped away from mining for a while and your GTX 1070 used to get 32 mega hash and now it gets 28, it's because NVIDIA hasn't addressed the DAG file increase issues, or AMD actually fixed it into a compute mode. So all the AMD cards, my RX 470 mining editions, are getting still 32 mega hash per card on Ethereum. If AMD did not fix it, those cards would be getting like 16 now mega hash, because there's an issue when it comes to the computing of that and the ability to calculate it properly to where it decreases and degrades over time. NVIDIA still hasn't fixed it. Even with, they haven't done like a blockchain driver version, even though they make CXP cards, right? And the 1660 Ti equivalents on like the CXP 80s and 90 series, they haven't still fixed that compute driver. Like, who knows, if you bought a CXP card, could you actually get more hash rate out of it, because they would have fixed the that issue. I'm reading some of this stuff, guys. How long do you think it will be until semiconductor shortages will last? My friend says the industry says it might take another 18 months at least. Well, part of it's the supply side of it, and part of it's obviously the demand side of it. So really, I'm looking at it more from a demand standpoint. What are the demand activities that are eating up a lot of that supply? As more people start to go back to work, maybe get less dependency on trying to build newer PCs, on top of if, ETH moves to proof of stake, which I don't think personally, and we'll have a whole separate video on this of why I think this. I don't see proof of stake happening, the merger, until after into 2022, if not mid 2022. And I'll go through an entire video of why I believe that with you guys. And again, that's speculation. I don't know anything that anybody else does. I'm just looking at the process and workflow that they're going to have to do, and then the testing they're going to have to do. And they still haven't reconciled the whole issue with being able to withdraw current, coins from Beacon chain. So once Ethereum actually moves over, what happens to that hash rate, and seeing that if that best case scenario, that's 9 months, then you would see a massive amount of GPUs come onto the aftermarket, which then would immediately relieve pressure and not even, have anything to do with the supply chain. So that's why I went straight to the demand side with that question, because I look at it, there's a lot more GPUs out there that would become then available, because as people would start to extract some of the value back out of them before the supply chain stuff's even fixed. So I think that's where it's at on that side. I'll answer a few more questions, guys, and then I'm going to wrap it up because we're at 56 minutes. How has your 6900 XT been treating you? I love it. I use it for everything. Gaming, rendering. It's an excellent, excellent card. And AMD drivers have gotten a lot better than they used to be. A lot more stable. Ironically, I've had more issues with my RTX 3080 for the Win 3 edition than I have had my 6900 XT. You talked about mining pool Lux before. Can you please show me what website you use to see mining pool Lux? So usually that's at the mining pool itself. So a pool will show you what their lucky percentage is on winning a block. So 2Miners show this. I know 2Miners solo show this, and it just shows predicated on your hash rate, or the total pool hash rate versus the network. Are they winning blocks within the times that they should? And then that, if it goes over 100%, that means it's taken it longer than statistically it should have. And you'll see sometimes it's like 300%, right? And that means it took the pool 3 times longer than it should have, proportional to their hash rate, to win a block. Because again, it's all a math problem on our ability to the network's ability to, or the particular miner's ability to win a block. And all that pooled hash power should win blocks against the network total hash rate, proportional to however much that is. So if you see a pool that's just consistently not winning blocks, it could have a bad string of luck. But at the end of the day, if you look at it over a long period of time, it really averages out around 100%. And the same thing with Bitcoin, with its delay and difficulty adjustment, to where with all this hash rate that's coming off, some block times take a lot longer than 10 minutes. So the mempool might not be full on Bitcoin, but it might have taken 20 minutes for a block to be found, even though it's locked. It's supposed to be set to 10 minutes. But with all that 10 minutes is saying, I've given a complicated enough problem for the proof of work network to figure it out, and it should take it only 10 minutes. But sometimes it might take it 20 minutes. But then once that difficulty adjusts to the new network hash rate, it could be more hash rate have came online as that network difficulty is adjusting. And now you're solving blocks every 3 minutes, and then it'll catch up as it readjusts, because it's just going to get to that next block adjustment on hash rate faster because it's solving faster. But if you zoom out and look at holistically over like 6 months and over several epochs, every 2 months roughly is an epoch at 10 minutes for a Bitcoin. So you look at it 6 months, now you have 3 separate difficulty adjustments within that. On average, it's around 10 minutes, if that makes sense. All right, guys, 15 seconds left here. Ish. $6,900 XTs for $1,500 is still crazy talk. It should be $1,000 GPU. And the partner cards might be like 1,300, but that's max. All right, my dudes, hopefully that was a good one. I'll see you guys on the next one. We should have a regularly produced video coming in the next couple days versus live streams, and then we'll get back to another live stream this weekend for you guys. We have a whole bunch of stuff a whole bunch of content to cover with you guys. We got also a new build coming. We're going to do a new desktop build with a full setup, so we'll probably do that probably on a stream too for anybody that likes the old desktop builds. We'll probably do that one straight to Twitch, and that'll be the live stream, and then we'll do a recap, like 10-minute video for you guys on YouTube for the TLDR bros. All right, my dudes. I will catch you on the next one. I see live tutorials going, wait. Wish me a happy birthday. Live tutorials, happy birthday, my dude.